Insurance giant IAG is taking small steps in a big market. The general insurer is following in the footsteps of AXA Asia Pacific, expanding in Asia through joint ventures with local businesses. While IAG's expansion into the UK was a mistake, its joint ventures in Malaysia and Thailand have proved successful. Its Southeast Asian experience is the springboard to tap the massive potential in China and India, but analysts say it won't mean easy money. Here's Philip Lasker.
Many Australian executives see this and they see huge potential.
I think we also have a responsibility to set the company up to be able to provide returns and growth 5 and 10 and 15 years out.
Today, at least, it was about the fanfare as analysts experienced the culinary delights from the countries at the centre of IAG's Asian growth story. Also there for the occasion were the chairman of Malaysia's AmBank and India's State Bank, IAG's joint venture partners, talking up their long-term potential.
And when long-term value emerges, the results or the returns could be, if I may say so, mind-boggling.
IAG's general insurance business will have access to the State Bank of India's 160 million customers through 19,000 branches. The numbers for China are equally impressive, where IAG is marketing to the northern Bohai region's 260 million people.
Insurance is it's a logical thing for a country that's increasing per capita income, increasing therefore asset ownership and middle class, and assets have to be insured.
But IAG isn't the only business to recognise the logic.
I think Asia is definitely a market where you can get growth. It's more the profitability. It's a market which is incredibly competitive, and there are a lot of players who are looking to expand in Asia and get access to that growth.
The insurance giant is forecasting a return on equity of 15% plus for its entire Asian division in 5 years. Next year's ROE for its established operations in Malaysia and Thailand is at least 10%.
The ROE targets should be able to be achieved. They've done it elsewhere in the countries where they're already established. But it is quite difficult to go into new markets and get a decent return within a reasonably short period of time.
The reality is, I think when you go in, you're never quite sure exactly what will succeed. You can have your best goes at what partner would be right, but at the end of the day, it's execution that matters. And so I suppose we've just got to wait for the next few years to unfold to see what kind of growth they actually get.
Analysts are well aware Asian expansion plans can look more promising than the reality.